Thanks, February 22nd, 2023, and we will go over the market, the interest rates, and we're going to go over our FHA and conventional. So, after this meeting, hopefully, you guys have some idea or a better understanding the difference between a FHA loan and a conventional, and when we would use either or. Okay. And if you guys have any questions along the line, you can just throw it in the chat box or just unmute yourself and speak up. Okay, so let's get started with our interest rates, right? So as of February 16th, according to Freddie Mac, they were at 6.32. These were the national averages, but as we know that the Freddie Mac goes back about a week, right? So we can see we're in the 22nd. This is from the 16th. So the interest rates were at 6.32. But we always pay attention to Mortgage News Daily, and they have more up to date interest rates rather than doing a week back. They are doing it on daily basis, and we see these interest rates go up and down throughout the whole day. So according to them, the 30-year fixed rate is 6.87. So we are going trending back, going up and up every week for past couple of weeks that we have been seeing. So it's almost hitting 7%. So when it comes to FHA is a little bit lower, but for conventional, you're looking at averages of 6.87. Okay. So if you guys are trying to purchase a property, or you have your clients that's trying to purchase a property, and they might get scared a little bit, hey, I don't want to go under contract because of the interest rates. So even if they're going under contract, they don't have to lock their interest rate with the loan officer right away. They should pay attention to it, see when it's going down, and the loan officer can suggest that, hey, we should lock it now because it's on the lower end and it stays locked in. So we have few files that's already were locked in at even 5.99, and they're closing in the coming weeks. So what is today's rate doesn't mean that they will have to lock in those rates today. So if you have your clients that shopping around and looking for properties, keep showing them. Just tell them they can, when they're going under contract, the lock time, the interest rate lock time should come in from their loan officer. Okay, but we're definitely trending on the higher end compared to what we were seeing in the previous months. Okay. Any questions on this, guys? All right. And this is just another article, just stating the same thing that we're talking about. That the rates are surging and they're going back towards 7%. And we don't know how high. That's why we're monitoring it twice a week with these meetings, and we're seeing the trend even when it goes up or goes down. We're keeping you guys up to date, but for now it's definitely going up a little bit from last week. Okay, that's your interest rate. Sorry, guys. For the affordability, I wanted to use I believe Prince. You had your client, you don't have to disclose anything. I just want to do the scenario with you on that. I know that you told me that a couple or a family household was making $95,000, and we're gonna say the interest rates are 6.8. Do you know their savings, the down payment amount that they, just a rough idea how much they had? 30,000. Okay, and you know their monthly obligations or no? So that's the car loan, 600 there. Okay. And are they looking in Queens or Nassau? Queens. Okay. So let's just put 6,000. Home insurance about 1,500, and let's say they go with FHA. In that scenario with $95,000 income and the interest rates obviously 6.8 as averages, and they only want to use $30,000 for their down payment, and they have a huge, this is a huge obligation compared to when you have this much down payment. This is on the higher end. The good thing is that they do want to be in Queens compared to Nassau. Otherwise, let's just give you an example. Let's just say it was Nassau, and $10,000 it drops. So let's just stick to Queens. Their home insurance about $1,500. Their DTI is about 50. If they go with the FHA loan, they just go up to 53. For that client, they can qualify up to $458,000. Okay. So if they come up with more down payment, they will qualify for more. If they increase their income, they'll qualify for more. Uh, if they pay off that loan amount, right, their car loan, so 200, and that would go up to 515. And the property taxes, we are just assuming they're 6,000. Let's just say you find them a property that's 5,000. That's they can qualify for more. Or if you find them $7,000, they will qualify for less, right? So in this scenario, your client is looking at around said around 450, 460. Does that make sense? Yeah. Okay, and Napi, you had a question. So when the client locks, so do you know what interest rate they're getting? Yeah. So the loan officer will usually give them a sheet. They will say, hey, the national averages are this, but in your particular case, right, you have this is the income you're making. This is what you are. This is your FICO score. All those everything that's put together. The the loan officer will give them a rate sheet saying that right in the middle, that's your starting point. That the lender is offering you guys 6.5. Who's this? Uh, Putting in 6 point. I don't know who turned off the camera. You could turn it off. Yep. So let's just give an example that the interest rate that they're offering is 6.5, right? This is the base. But if they want lender's credit or if they want to buy down the rate, they would have both options. So they can lock in that rate sheet, right? And then if they want to go up or down, they can do that after even locking it. But obviously the client will know exactly that they're locking in at this. If they don't make any changes, they will close the loan on that lock number that they actually chose. So let's just say it was 6.5, they're locking in that, and they usually lock it for 30 days. There are times they will do it for 45 days or 60 days, or if the time is expiring, they can pay a little bit more money and extend that lock time. But in generally, they will start off at 30 days and go from there. Can you hear me? Sclaren, you having a hard time? Sclaren can't hear me. Can you guys hear me? Okay. Okay. Thank you guys. All right, cool. So we'll keep going on. Okay. So interest rates, they will get it. The loan officer will provide it, and the loan officer will tell them. We'll usually suggest, hey, because we're the loan officer is keeping an eye on the interest rate when they're going down and up, and we always want to have the best interest for our client. So the loan officer will tell them, hey, this is the best time or this is a good time to lock in. Do you want to lock in? And the person will say either yes or no. But the loan officer will definitely help you guys out on that note. Any other questions on the interest rates or this affordability calculator? All right, guys. So let's move on. This is another article that is very similar to what we went through last week. Even though that we see that the housing market is slowing down a little bit, but for new permit for new buildings are rising. So that's a good news for us. So just to keep an eye on those properties as well, and just stay in the market um, when it comes to new builds. Okay. This is according to our NAR. This is our National Association for Realtors. The existing sales, home sales, are down again. Again, when the interest rates go higher, it's just makes sense that everybody is hesitate to go under contract, or they don't know have enough information about locking in the loan or anything. They just read the news. Hey, their interest rates are going at 7%. They just back up. So that's what happens. Even though it slid down less than 1%, still on the lower end. We tell you the positives and we tell you the negatives. So when the sales are going up, we'll disclose those, and when they're going down, we also disclose those to you. Okay. And it just makes sense. When the interest rates are higher, the sales will go down and vice versa. And this is a good news for, we're going to go in depth for FHA loans. But this is the article just actually today. This is for FHA MIP, which is mortgage insurance premiums by 30 basis points, right? So how will that help our clients if they're going with the FHA loan, and if they're paying less fees, their monthly payment is going to be less or lower. So that's a good news for them. Okay. So before we get into our FHA and conventional loans, just know that the conforming limits, right, the loan limits have increased for 2023. So for our anywhere in Queens or anywhere in New York, our five boroughs, we're considered a high cost area. And for a single unit, right, a single family, the loan can go above $1 million now, and two unit can go up to 1.3, and three unit can go up to 1.6, and four unit can go over a little bit over $2 million. So this helps because they will stay within, if they someone is getting an FHA loan or a conventional loan, as long as they stay within our conforming loan limits, which are set by the government. That means they will stay within the guidelines by the government, right? As long as the loan amount is less than these amounts. If it's a single family, they will stay below $1 million. There should be no issues. Okay. So, any questions on the conforming limits? They just went up just a few months ago. Okay, that's the loan limit that they can get. The next thing we want to talk about is our first time home buyers. Some people get confused when we say that, hey, I'm a first time home buyer. Does not mean that the first time home buyer straight up needs to go with a FHA loan, right? We're going to go over the benefits of FHA and conventional, but just don't assume that he's a first time home buyer and they're going to go with a conventional loan. That's not the case, right? Who's this person? Powell, could you turn off your video? Thank you. Okay. Hold on one second, guys. Okay. All right. Sorry about that. Okay. So just don't assume that when they're going for this is their first time purchase for the home buyers, right? Does not mean that they will go with the FHA. If FHA makes sense for them, they will go with that. But the benefits of being a first time home buyer, right? There are a lot of assistant programs that are powered by each state. So, for example, for New York, there are programs called Sonima for conventional plus. There's Sonima for FHA plus, right? There's home for veterans. There's so many different programs out there that will assist your clients for the first time home buyers, with the down payment. And like I said, different programs will do different things, and they will have different guidelines. Some of them will have certain amount of limits for their income compared to their area income, and a lot of different factors. But just know that the first time home buyer, they have options for down payments program assistance programs out there. Does not mean that they have to use them, but just that they are there. Okay. So going from first time home buyers, right now we want to talk about our conventional loans versus FHA loan. This is what we want to spend most of our time on, right, on this page here. And please ask me any questions that you have, so this way you guys have a better understanding of that, right? None of the loans or is better than one of the other, right? It really depends on their situation, right? The buyer situation. The biggest factors we're going to go over, right, are when we're comparing them, that when we look conventional, we mentioned this last time too, that most people think that when you're going with the conventional, you have to put 20% down. You do not. If you put 20% down, that's great. And your offer will be solid, right? It'll make you look good that you're putting in more down payment. right? You have money and in the bank, but there's pros and cons to it. Some people don't want to, even though they have more than 20%, they want to use as little as possible for this property and save it for future investments. It could be more properties, or they want to invest in other things out there. So if they're putting down 3% for conventional, does not mean they only have 3%. For FHA, same thing. But if the more they use, the better for them, because they will have to pay less PMI, their mortgage insurance. Okay. So when we're talking about down payment, when we're comparing them, the minimum they will go with conventional 3, and for FHA is 3.5. Okay. The minimum credit score that you need. This is where FHA comes in handy. So if your credit score is not great, right, they're around 580, then you probably want to look into FHA. If your credit score is good, or even better than 650, 660, anything along those lines or higher, you probably want to definitely check out conventional as well. Okay. Because FHA, we want to mention that too. The FHA loans, right, they're backed by the government. So what does that mean? It means like when the person, now the borrower, stops making their payment, the government is telling the lenders now, even this person defaults on their loan, we're going to cover that, right? And how they're going to cover that is through their mortgage insurance that everybody's paying on monthly basis. So they have pool of money that's sitting, they're collecting from every FHA loan that they get. And if someone defaults and they cannot make the payment, it goes through foreclosures and all that. But the government has enough money to back those loans. Okay. So that's why FHA is there, for to assist these people that have low credit score, they have lower income, and their maximum debt to income ratio is even higher. We see that they can go up to 54. Right, Josh? It goes to 54 for FHA. Yeah, so DTI can go up to 54. So they're saying, you can put more money for their home compared to what they're making, right? They're allowing you to use more of that towards your uh, house payment. And we already spoke about the loan limits, because we're living in our high cost area, so they're a lot bigger or larger than what. Okay. So as we mentioned, so both conventional and official programs, down payments, right, are required. Both of these to be, these are main requirements. FHA 3%, or FHA 3.5%, or conventional 3. So again, if you have your credit score lower than 580, you probably want to definitely check out FHA. Okay, because with conventional, the lenders would not even give you, if your credit score is 580, they would not even give you an option for conventional, just because they have their overlays, which is that they want higher or better credit scores for conventional loans. So let's go more depth in our credit scores here. Conventional, we said 620, but we have seen lenders, they go up to 640, 660, 680, on the lender out there. Josh, what is our requirement for UWM, which we use for conventional? 680 for. Yes. Yeah, so even though this one says. Mhm, go ahead. Yeah, so we'll go over that. So debt to ratio, this one says 43, but our lenders will go up to 45. But the credit score, conventional, they don't want to touch anyone or offer conventional loans to, if you have your credit score lower than 680 in our case. But like I said, it will matter from lender to lender, right? So let's talk about the mortgage insurance now, right? So there's different parts in FHA loan. So when you hear MIP or PMI, they both mean the same thing, right? But when it comes to FHA, it's considered MIP, mortgage insurance premium, and when it comes to conventional, it's called PMI, which is private mortgage insurance. Both of them means the same thing. But when you're getting, this is a downside for your FHA. the cost for MIP is the same for most borrower, which is 0.85, so less than a percent of the loan amount per year, with the one-time upfront fee of 1.75. Okay, this is what the lender is usually puts it in the mortgage, right, in your down payment, so it's built in, but the borrower is actually paying upfront one-time fee for FHA, right? And when it comes to conventional private mortgage insurance, PMI now, right, as long as you're putting less than 20%, you do not have to pay this. But if you put less than 20%, but as soon as your equities hit 20%, this will go away. So that's why a lot of people get confused where you're saying it comes to conventional loans, they want to put down 20%. That's great. How about if they want to put down 10% for conventional? They obviously can, right? When the equity hits 20%, they will stop making that mortgage insurance payment. Okay. Questions before we move on? All right. So when it comes to mortgage rates, right? FHA loans, even we're giving this example here that this is conventional 6.87 and this is FHA 6.25. Obviously, this is backed by the government, so these loans are less risky for the lender, right? And because of that, 6.5. So they will always, the starting point is a little bit less than what we're asking for in conventional. This is they're giving you a similar example here. Okay. So this is another good chart. So this is with the FICO score. So let's say if your FICO score is 580 and you're going with FHA, which is the blue one, right? So if you're 580, you're not even eligible is grayed out for conventional. So if you're with 580, the only option you have is your FHA. Same thing for 600, right? You don't have any other option. So how about when it comes to 620, right? Your credit score is FICO score is 620, your FHA is going to be a better option because FHA payment is going to be 1300, your conventional is going to be 1600, right? But you can see that as soon your interest rates, I mean your FICO scores are increasing, they're going from 640 all the way up to 800, your conventionals do drop. So your interest rates will, the lenders will give you a better interest rates, the better credit scores that you have. Not with FHA. As long as, even if you have 580 or if you have 780, your monthly payment for FHA does not change. So again, if you have good credit score, you probably want to go with conventional and compare them. But if your credit score is below 600, it's just best to go with the FHA, right? So let's look at this graph here, guys. This infographic here for FHA versus conventional. Again, minimum credit score 580. If you're having a conversation with your client and they're telling you that, hey, I want to purchase a house, but my credit score is really bad, and you want to tell them, hey, maybe speak with your loan officer and see what are your options for FHA and conventional. If they tell you, hey, it's 740, definitely they're gonna go with the conventional, right? It would just make sense for them for conventional. They don't have to worry about refinancing or anything like that. So FHA 580, conventional 620 plus. And down payment we mentioned 3.5 for FHA and 3% for conventional. And long-term goals, the FHA mortgage is not cancelable, so it will not get canceled automatically. For conventional, it will. Right? Any questions before I move on? Okay. So there's even more programs that are available through the loan officers and the lenders that they're working with. They're from Freddie Mae, they're from Freddie Mac, but know that these are the basic things that you guys need to know for FHA and conventional. Low credit score, go with FHA. Low income, go with FHA. Obviously, when their situation changes in coming years, one is that the equity is being built, two, they're fixing their credit, and they have income coming in. They can take all those factors and go with the loan officer again and say, hey, we want to refinance. So we want to get out of FHA and we want to go with the conventional loan, and you can definitely do that. So these are the frequently asked questions. So which is better, FHA or conventional? Again, we said it will depend on the financial circumstances by the borrower, right? If their credit score is lower, FHA makes sense. If their credit score is great, 740 above, conventional will make sense. Okay. And we just mentioned, can we switch from FHA to conventional? Yes, you can. you know Usually some of them will want you to wait 6 months, a year, but you can definitely refinance and get out of the FHA loan. Let's just say you're the biggest difference one of the biggest differences is that FHA, you have to live there. Anytime you get an FHA loan, it has to be a primary residence for 1 year. So if you live there for 1 year, you want to move out, you want to refinance, take some money out, and purchase another property, that's great. You can even get another FHA loan for the new property that you're going to live in, and the old property can have a conventional refinance. Okay. So what are the benefits of a conventional loan, right? If you get a conventional home loan with 20% or more, you don't have to pay your mortgage insurance. That's the biggest benefit that you have there, right? But as we know that the FHA requires 3.5%, but it's definitely better if you're on the lower credit score. Some people ask, is it FHA a bad loan? FHA is great for people who have, they're just starting out. They want to purchase a house. And we know that even as realtors, that the rent is going up. We had a situation where they're renting out, one bedroom for $1,800. Some areas they're charging $2,000, ridiculous amounts where they just feel like, that they can just purchase a three-family house, and instead of paying $2,000, they can pay $3,000 payment, but they will still own the house. They have money in the savings, and it just makes sense for them to go from renting to purchasing their first house. And FHA is a perfect, pathway to get that. Again, a lot of people start off with FHA. Does not mean they stay with FHA for a lifetime. Few years in, they have enough equity built. It's a great time to refinance, purchase another house, and move on from there. Right? And what are some disadvantages for FHA? We said that if they're paying less than, their mortgage insurance does not go away automatically, right? Especially if they put down less than 10%. If they put 3%, 3.5%, 5%, 7, and as long as it's less than 10%, right, their insurance will not go away. So eventually they have to refinance because it makes no sense to have equity built in your property. Let's say you have 25% equity in it and you're not refinancing. Why would you want to keep paying $300, $400 extra in your mortgage payment, right, every month, where you can easily refinance and stop making that payment? So that's how people actually do it. And I think most people should be able to answer this. What credit score do we need? Do I need for conventional? Uh, at least 620. But if it's 640, 660, and we mentioned 680, one of our lenders goes with 680. So the higher the credit score, that's what they would need for conventional loan. Okay. And how about FHA loan? It can be as low as 580 or higher. There are some cases where they will go even lower than that, but instead of that 3.5% FHA, if you're really terrible and it's between 500 and 580, the lender will want you to make 10% down payment or more. Okay. So what's the interest rate on conventional loan? Typically, when we say interest rates, we saw on our chart too that it starts off better than conventional, but the conventional interest rates keep dropping lower to the borrower that have better credit score. Okay. So you mentioned these. So what is better, conventional or FHA, right? The bottom line should be that it really depends. If your credit score is lower, start with FHA. If your credit score is great, go with conventional. But the best way to test it is to getting a loan estimate. Those loan estimates goes a long way because you can clearly see all the details. You can see what your monthly payment is going to be, what your PMI is going to be, right? Your mortgage insurance is going to be, everything that you need for that 30-year term. The loan estimate will give you that. And there's no harm in getting two or three different loan estimates from different lenders. Even I would recommend getting two loan estimates from each lender, one for FHA, one for conventional, going to a bank number two, doing the same thing. So this way, your lender, your borrower can actually compare them. Hey, I'm getting an FHA loan. This lender is saying I can get an interest rate of 6.25. This one is saying 6.35. But these are the fees that they're including, right? So that loan estimate has very low tolerance of changing, those numbers changing when it comes to the closing disclosures. So it's best that you guys get, or your clients guess these loan estimates and actually compare them. But when it comes to as realtors now, when we had, sorry guys, it's just noisy. So when it comes to offer letters, right? When the market was super hot, nobody was the sellers now, right? When they were getting five offers, three of them were conventional, two of them were FHA. In most cases, unless the FHA's value, the offer price was really high, they were simply ignoring them because FHA has a little bit more restrictions when it comes to home inspections, right? And just they're just more guidelines when it comes to FHA. When conventional, they're a little bit more easier going. Sometimes they will even waive the home inspection, sorry, the home appraisal for conventional. FHA will never do that, right? FHA always wants someone to go there and take a look at the property and evaluate. But that same seller now, if he has three offers, all three of them are FHA, they will take a look at them. It's just a matter of the market. If the seller has a lot of choices, if he has conventional and they were seeing conventional with 20%, 25% down payment, they were just hopping onto those. They didn't want to look at FHA. What the way the market is now is that even if you have your clients that's looking for, they're having FHA loans, go with them. Tell them, let's submit your offer. It has to be a solid offer. Just don't lowball. But even if it's a FHA, that should not be a concerning or red flag for your sellers, right? Questions, concerns, guys? So this, so anybody has any questions? Want me to break it down a little bit more? FHA, conventional? No questions. Either this is too simple or I went too fast. Any feedback, guys? So, like I said, during COVID time, we were seeing a lot of offers getting rejected as soon as they saw the word FHA on it. These days, a lot of people are putting in offers as FHA and they get accepted without any problems. So if your client has, FHA or conventional, just tell them it's not a problem. We're going to submit your offer and we'll see how it goes from there. Thanks, Julian. Yeah. Right. So, like I said, even if it's a first time home buyer, they can go with either or. If it's a first time home buyer and the credit score, it's above, 620 or let's just say close to 700, conventional might be the best option for them. And people with low credit score, FHA might be the best option for them. And we have closed loans on the both ends, FHA and conventionals, and both of them close. The closing time is very similar, or getting clear to close is very similar. The only time conventional is a little bit faster if the bank appraisal is waived. So you're saving at least a week, week and a half, from getting clear to close. But when it comes to FHA, we mentioned that they have to have a bank appraised, so that will put an additional week to it. But again, both of these should get cleared to close within about 21 days or so. Right. And I do want to mention, someone, you guys asked me for escrow account, right? And we made a video on that too. Just in case if someone wants to know now, for escrow accounts, that is when they're making, let's say that the monthly mortgage payment is $2,000, right? Maybe just to give you an example, $1,500 is going towards the principal and interest, and your 500 is going for your mortgage insurance and your property taxes, right? Those things will be held in a savings account. When you hear the word escrow, just think of savings, right? The bank is saying that even though you are great, you can manage your money and all that, but we want to set up another account for you. This is just to pay your taxes on yearly basis, right? And your insurance on yearly basis, right? And we want you to have enough money. So when, let's just say you get a invoice for your taxes, $5,000, and you say I have no savings, that's why the escrow account is there. That is your account, that is your savings account, and it sits there until you actually refinance or you pay off the loan amount. Okay, escrow savings account. Okay, all right, guys. So that is it for my presentation. Any questions, concerns before we get going in a few minutes? Okay. All right. So we will leave it at that, guys. Next meeting, you tell me if you guys have any suggestions that you guys want to go over. There's still a few topics pending from a few of our agents. So if you guys have anything that you guys want to talk about, please feel free to mention that to me in chat, and I'll definitely get more information on that, right? And make that as a topic for next meeting. But like I said, this meeting, I just wanted to clarify FHA and conventional, and a lot of people are getting confused when it comes to first-time home buyers, right? First-time home buyer, they can definitely go with either or, depending on their credit scores and how much money they're gonna put down. Okay. All right, guys, we'll leave it at that. Then you guys can get going one by one, and I'll see you next time on Saturday at 11. All right, you're welcome, guys. Yes, Claren. Probably you'll do that next time. Listing presentation. Someone else requested that too. So listing presentation will be next for sure, Saturday. You're welcome, guys. You're welcome. You're welcome, guys. You take care, all right? Gotta run now.